Bank of Canada's June rate cut just got slashed. What does that mean? It means the probability of a rate cut coming in June is very unlikely now because we got stronger than normal job data just recently. So what does this mean for the real estate market? I'll be breaking this down for you on this week's reaction video. Now, if you're looking for some help on how to navigate this real estate market, and again, I've been saying over and over again, no one knows what's going on because everything's so volatile, but everyone's situation is very unique depending on what you're trying to do, whether you're buying or selling in a certain area, because every single market is moving differently. And I've been saying it over and over again, the condo market moves different from the freehold market. The suburban market moves different from the urban market. So if you want to talk to me about your personal situation, about whether you should be doing what you plan to do in the real estate market in 2024, you could do so by booking a call with me using the link that's right here. It's www.chatwithzen.com. Simply click on the date and a time that works best for you. And then when you see the prop, fill in your name, email, mobile phone number, and the question you have for me, and then we'll chat then. Good day, Toronto. Welcome to another episode of Prime Properties TV. My name is Zhen, and if you're enjoying the content I'm putting out there, do me a favor and like and subscribe. So the article we'll be reviewing today is Bank of Canada, BOC, June rate cuts bet slashed after unexpectedly strong job data. So the two main things that people look at right now for whether there's going to be like some kind of sign of a rate cut is one, the CPI report that comes out monthly, and two, the job data that comes out monthly. But again, I don't know how valid this job data is, but we'll go through it because things just aren't looking good for a rate cut anyways. So they're saying over here that a stronger than normal Canadian jobs report has prompted a reassessment in the money markets when the Bank of Canada is likely to start cutting interest rates. So as a refresher, the next rate cut announcement is June 5th. So I have it over here open for you guys. You can see down here. June 5th was the next one that's going to happen. Then the one following that is July 24th. Then we got September 4th, October 23rd, and then December 11th. Meaning that we have 5 potential rate cuts. And if you even cut like a quarter point each, you're not getting to that 1.5% rate cut. So all the people out there talking about 1.5% rate cut by the end of the year, don't think so. So implied probabilities in swap markets now suggest less than 50% chance of a Bank of Canada rate cut on its next meeting. So they're saying now it's less than 50%, which generally means it's not going to happen. So here's just kind of what the current market looks like. It looks like it's a 41% chance that there's going to be a rate cut in June 2024. Again, sub 50%, unlikely to happen. Again, there's some things that may change because we may have a CPI report coming next week, I think on the 21st. But unless it's really, really bad, I don't think this data is going to change too much. So previously, they're saying that the swaps market was saying that there's a 70% chance of rate cut. So, more than a coin toss. But now it's below that. And they're now fully pricing in 2 rate cuts only by the end of the year. And this is what I mean. The data keeps shifting. It's very volatile. And anyone who tells you that they know for a fact something's going to happen with the interest rate, they're full of baloney, right? So you really got to watch out on who you're getting information from, because I think the only thing that we've learned in the last 3-4 years is that because the market is so volatile, we're all humbled enough to say we don't know what the hell's going on right now. And data keeps changing all the time. So for now, the market's saying that we're going to get 2 rate cuts for the year. So it'll be in maybe July, September, October, December. I don't know if I have to guess, maybe one in July and one in October if they can hold out, right? So again, that's what the market is saying, right? The market's not always right, but that's what the market is saying, right? Now, this over here is the chart showing you, again, those interest rate swaps. And these are the dates that line up to the Bank of Canada's announcement date. So you can see over here right now, we're at 5% overnight rate. To get down to 4.49, which is 4.5, there's a 95% chance of a cut. Now, if you look at this previous chart, you can see that we're closer to 3 cuts, and it was 97%. And this is why I'm saying all the data keeps moving. It always keeps changing. So it's hard to kind of time a lot of things, especially if we're buying and selling. Where a lot of people are probably watching this, I would say, is anyone who's coming up for a mortgage renewal and whether you go variable or fixed, right? And again, this is a long, complicated topic where you have to look at the discount on the variable versus the fixed market, how long you go for, how long you hold the property for. But yeah, talk to your mortgage broker. So one of the things I did highlight here is that there's an upcoming CPI report, which is essentially every month. It's a little bit past the middle of the month. And that also has a big weighing component on kind of where the data says and what the market says, whether we're going to get a rate cut or not, right? Now, this one, I just want to highlight because I think it's important. So it says, The likelihood of a rate cut coming in July is more likely because there's going to be 3 CPI reports that are going to happen before the June one. So the June one will have one basically next week, and it may not be enough information for the Bank of Canada to assess whether they're going to cut rates or not. But the July one, because the July one is happening on the 24th, right? That's the announcement date. They're going to have this upcoming one for April, then the May one, and then the June one, and they're going to see where the CPI data is going to be. And I've talked about this in the past before. The CPI data from February to June is going to look really good because it was really high last year, right? So just from base effect, meaning like the rollover from last year, it's going to look good. So there is merit that, July is going to happen. But again, no one knows what the data is going to say at the time, right? So what does all of this mean in the real estate market? Let me put it this way. In short, nothing. I think it's going to continue having this pause in the market, like this stalemate where all the buyers, unless they have to buy or they want to buy or they're trying to find a deal, they're probably going to just wait it out because they want that reassurance of the rate cut. So I don't think we're going to have this magical spring market that everyone's hoping for. And now that we're already in May, things are still continuing to get slower and slower from April, right? Like properties are still selling in the freehold side, especially in the entry level, but like the condo market is softening and softening and softening, and we're still getting more listings and more listings. The listings should stop around like mid to end of May or so, and the spring market kind of tapers out into mid of June. So if you don't get this rate announcement in June 5th, it takes any kind of like sizzle out of the real estate market for spring, and then we're gonna have to wait until like say July for something to trigger, right? And usually in July, generally pretty slow. So being that the rate cut is in like end of July, August is the second slowest month in the entire year, most of the time, the slowest being December. So I really don't think that, the market's going to say pick back up until at least the fall. So as a seller, a lot of people are like, hey, if it looks like there's still a rate cut, why don't I just wait until the fall to list? And the problem realistically with that is we had that last year and a lot of inventory came to market. We just don't know how much inventory is going to be in the market at the end of spring. So call it like, Canada Day, July 1st. And if we're like over 18, 19,000 listings, that's a lot of listings that for us to absorb. And when you have another surge come on in September, be like, oh, you know what? We have like 20,000 listings now. That's a lot to eat through with only one rate cut, right? Now, some of them may say, hey, we may get another one in September. Yeah, that's a valid point, right? But the thing I keep going back to right now is, yes, the rate cuts only affect the variable rate, right? Right now, the fixed rate is already like 1.5% cheaper than the variable. So unless the banks start discounting their variable on top of these rate cuts, buyers, again, are still buying with fixed. So that's why I think none of this stuff is going to move the market. It's going to move the sentiment a little bit. And my concern is that if the sentiment even improves, but we have so much inventory is the biggest indicator of where prices are going to be in the next 30 to 60 days. And inventory right now is high. It's at almost 17,000, if not maybe a little bit more, depending on like what day you're looking at it. So we need that inventory be absorbed first so that prices can go up. But unless inventory does get absorbed, I don't see how the rate cuts are going to drive that much demand to get prices to go up. It may have a little bounce where sales happen more rapidly, but I don't think prices are going to be jumping up like crazy that the sellers are expecting, right? So you really have to understand how this applies to the real estate market. And while it is good news to maybe, give a little bit of aliveness to the market because it's kind of stale right now, I don't think it's going to be like, oh, the first rate cut to the moon, right? I just don't think that's going to happen. So hopefully you understand what these rate cuts mean for the real estate market and how this applies to you and your personal situation. And if you do want to talk to me personally about your unique situation, you could do so by booking a call with me using the link that's on the screen right here. It's www.chatwithzen.com. Until next time, your move, your future. See ya! Now that you're done watching this one, how about this one or this one? You know what? Just watch them both.